Happy Monday morning. Hi guys, welcome back to my channel, The Wealthy Mindset. It's yours truly, Money Making Mitch. And as usual guys, this is not financial advice. Please do your own due diligence and research. Let's start off with this. NEO was last trading at $5.40. The 52-week high was $16.18 and the 52-week low was, $5.30. As a disclaimer, I hold 2,260 shares at $3.53. And on the SoFi platform, where I keep adding slowly, I now hold 721 shares at $7.91. And I'm going to buy 20 more today. I was going to buy tomorrow when I get paid, but I'm going to buy 20 more shares today. And on my IRA account, I hold 839 shares now at $7.37. NEO is the first company, the very first company where I broke my rules. I never buy shares higher than what I originally paid for it. So if I buy something and the share price go down, while others crap in their pants, I rejoice. I always remember what the great living legend Warren Buffett said. When the market is fearful, we feed. Of course, you don't want to feed if the stock is going down and the company is not doing what they're supposed to do. But if the company is doing what they're supposed to do, and you see in the future all the chips aligning to where it's going to be a mega corporation, why are you crapping in your pants? Pull your pants up and be a man. So NEO was the first time when my average on Charles Schwab is $3.53. But I started two more accounts, one on SoFi, which I love using their platform, and I have shares in that company as well. But anyway, I opened up another account with them and I started buying NEO shares there as well. And like I said, my average is $7.91. And on the IRA account, my average is $7.37, which I will keep buying there as well. Now, Yahoo Finance put out a report on the SoFi platform. I got this. It's from the Motley Fool. Justin Pope is the writer, the analyst. He says, Wall Street enthusiasm for electric vehicles isn't what it was a couple of years ago. And that is true. And I said it before, in America, people are not excited about EVs because of range anxiety. Main reason. And they've come to realize if they buy an EV and it doesn't have battery as a service and they can't rent the battery, the EV is worthless after 8 years. Why would I not want to have some resale value? This is where NEO comes in, where 70% plus of that resale value will be still there when you're ready to sell it. Because there's no battery, we don't have to buy the battery. Anyway, NEO, vehicle manufacturer NEO, are down a staggering 90% in terms of the stock price from the high they reached in early 2021. A growing fear surrounds China's economy, with conditions marked by Chinese consumers reportedly struggling and spending less. Having said that, we all know that the Chinese economy is still about 1 million times better than our own economy here, because we overprinted money. Our money is now like monopoly. It's worthless. The only thing holding it up, it is still considered the reserve currency, which is quickly changing. And when BRICS come into play, and right now it's 11 countries, I believe, and another 23 signed up to join, and they're all going to move away from the American dollar. What are you doing to protect yourself from that? So anyway, so they say the Chinese consumers reportedly struggling and spending less, but does all that justify NEO's deep stock decline? That's the question. Or is this an opportunity to buy an up-and-coming company at bargain basement prices? So I would like to change what he said. Or is this an opportunity to buy an up-and-coming monster giant corporation at the bottom level? That's my question. Most recent sales data points to solid momentum. NEO primarily sells its EVs in its domestic Chinese market, but it's expanding globally. So, right there, it says to you, we don't have to worry Even though, yes, the Chinese economy is getting ready to pass the American economy in the next 5 years. This is a known fact. But even though, according to the analysts, the Chinese economy has slowed down, they call it struggling, it's slowed down, we're expanding into other markets. Remember what King William Lee said, 25 countries in 5 years. But is expanding globally, including ramping up in Europe, and is weighing plans for the United States by 2025. Who knows? Maybe before that. And if they don't come to America, because some of the trolls come on my channel and said, well, they'll never come to America, they'll never be allowed to come here. Shut your mouth, boy. But if they don't come here and they do what Toyota did and they spread throughout Europe first, we will get left behind in the dinosaur, in the age of the Flintstones. So, the company's EV lineup includes 9 models of cars and SUVs with, with the sub-brands, brands plural, coming out this year and more sub-brands to come out. NIO has also pioneered a battery swapping technology that can remove a drained battery and replace it with a fully charged one in approximately 3 minutes. However, promising technology doesn't necessarily translate to business success. Just ask Lucid Group. Even though, and I have to admit, they have some incredible technology, Lucid Motors, but they're struggling because, I say it again, they do not get the funding that NIO gets. Whenever King William Lee go to anyone and say, I need money, cough that shit up, they cough it up because they see the business model as superior, knowing that battery as a service is the only sustainable way forward for EVs, giving back to the grid. Anyway, investors can look at the sales data for honest feedback on how NIO is doing. In January, it delivered 10,055 units and 18.2% year-over-year increase. The company's fourth quarter deliveries were up 25% year-over-year. It doesn't seem like NIO is struggling to move its EVs. That could change if Chinese consumers struggle worsen, but NIO is also expanding into international markets, which could offset some of that potential weakness. It will offset a lot of that potential weakness because we would be able to sell EVs, our sub-brands coming out cheaper than an ICE. A gas-guzzling car will cost you more than a NIO sub-brand. What do you think the Europeans will buy knowing they have battery as a service? Boom! 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 Are you with me? Now, November energy vehicles, battery, EV, hybrids, and fuel cells accounted for more than 40% of vehicle purchases the first time they had exceeded that milestone. So even if the Chinese economy cools off, which I don't think will happen this year, but let's pretend it cools off, more Chinese are going to keep buying EVs compared to ICE vehicles. So we don't even have to worry about that. Furthermore, let me say this again, a lot of people forget this. The Chinese Premier Xi Jinping on the New Year's speech to the nation says that they will be providing stimulus to the economy. And a lot of it is going to go to the EV industry. What do you think will happen? Booyaka! Now, share price and fundamentals moving in opposite directions. It's somewhat ironic that NIO's share price has plummeted by 90% over the past 2 years, while its revenue has nearly quadrupled. NIO isn't profitable yet, but that's normal when a business is spending billions on ramping up its manufacturing operations. Remember, it took Tesla 18 years to become profitable. And that cheap piece of junk Model 3 is what saved them. Anyway, and the overhead of such factories is expensive. They need to operate at capacity to be profitable. This is where the sub-brands are going to come in. I keep saying that. Anyway, and as we go into other markets. The important thing is that NIO is continuing to grow its output and is selling what it does manufacture. Over time, its cash losses should slow, then pivot towards break-even and eventually profitability. So some of the trolls, negative Nancy's and animals still keep coming and saying, well, they're not profitable yet. We buy based on future projections, you clown. Now, NEO's third quarter operating losses were 581 million, including stock-based compensation. The company has 6.2 billion in total cash and equivalents on the balance sheet. So investors, listen to this very carefully. So investors don't have to worry about it running out of cash. So if I'm not worried about it running out of cash, if it's doing all what it's supposed to do to continue to grow, why should I sell my shares when I know if I put it up for sale, it will take a millisecond to be gone? Because the whales are buying it. Is NEO a buy, sell, or hold? If you look at NEO's price to sales ratio versus publicly traded competitors like Tesla, Rivian, and Lucid, NEO stands out as the cheapest by a wide margin. The question for investors is whether NEO deserves to be. Based on Tesla's profitability alone, I think it's fair that the US EV leader trades a premium to NEO. But the others, he says, Lucid delivered fewer cars in all of 2023 than NEO did last month. Lucid is facing a far longer road to grow its production, so for it to be trading at a PS ratio more than 5 times higher than NEO doesn't make sense. But we know why that's happening, right? Don't we, guys? They're going to pull the rug out again from under Lucid investors when they least expect it, and then they're going to panic and sell. Right now, they're panicking NEO investors when they should be buying it. Rivian is also unprofitable and expects no sales growth in 2024. That's not to say that NEO is a risk-free stock. The company will still need to execute a high level for years if it's going to succeed. But one could argue that NEO is getting punished excessively by investors despite executing better than EV companies not named Tesla. They're getting punished by we know who, right? The establishment like JP Morgan, MSNBC, Bloomberg, Yahoo Finance, etc., etc. They're not getting punished by investors. It's the illiterate investor who knows nothing at all about stocks, look at their phone and see NEO stock price going up, panic, shit their pants and sell. And this causes the stock to come down. Now, JP Morgan said what they said and they bought more shares. We all know this again, right? They get away with it. There's no accountability in the West. We know that. But when JP Morgan said what they said, and the stock is tanking, and the uneducated investor didn't even know why it's tanking, they just sold. And we need to learn how to play the game to get a piece of the pie. So we're supposed to be buying. Just like JP Morgan. Anyway, NEO looks like a far better buy than many of its peers for investors who are seeking long-term upside and who are comfortable holding Chinese companies in their portfolio. So let me say this again, guys. This came from the Motley Fool. The writer, the analyst, his name is Justin Pope. I agree what this gentleman had to say wholeheartedly because I see what the company is doing. I see what the company is doing, so I'm not fearful. In the past, when I first started in the stock market, I lost a lot of money because I didn't do no research. I didn't do no research at all. I didn't even know where to look. So if you guys want this article, you can go on Motley Fool. For those who use the SoFi platform, I'll leave the link again in the comment section. On the SoFi platform, you can get this, a lot of news for free. That's why I love using them. Anyway, I hope you guys found this video to be informational and inspirational. If so, guys, don't forget to hit that thumbs up. A lot of you guys are not hitting that thumbs up, that like button. If you haven't yet subscribed, you might want to think about doing so, because in this channel, we are waking up the middle class to get a piece of the pie with that warrior mindset. Like 50 said, we get rich or we die trying, guys.